Stonk Insights. This is not financial advice. Today's video, we're going to talk about CleanSpark Incorporated, ticker symbol CLSK. They just had their Q4 earnings that they released yesterday. So we're going to go over that. We're going to go over the company, get an overlook of the company, see if it's healthy or not, and if it's in position to make it to the next Bitcoin halving that's happening in June 2024. So if you're interested in the video, watch this whole video. Like this video if you like this video. It does help me out, moves me up in the algorithm, and I do appreciate it. And if you're interested in stock, crypto, analysis, or discovery, hit that subscribe button, as those are subjects I do talk about on this channel. So without any further ado, let's take a look at CleanSpark as we transition over here to their stock chart. Now, as with all these other Bitcoin mining companies, they're not the exception. They are down massively since Bitcoin took a dive from last November 2021. As we see here, when Bitcoin was at their all-time high, highs, CleanSpark was at $23.60 per share. Fast forward till today, we see that CleanSpark today is $1.90, and they're down 91% from their all-time highs. And one thing I just want to make note, with all these Bitcoin mining companies, they're down more than Bitcoin. Bitcoin is only down about 75% from its all-time highs, and these companies across the board are down 90% plus. And there's a number of factors because of that. One being that Bitcoin, the price of Bitcoin that they mine is down. Two being that the price of energy has went up since, back when Bitcoin was at its all-time highs. And three, the difficulty to mine Bitcoin is at its all-time highs right now. So we put all those factors together. These companies have to fight and scrimmage to try to make it out as bear market, and we're seeing it way down on the stocks more so than Bitcoin itself. All right, so let's just take a look at this company, just give a brief overview. CleanSpark, they IPO'd in 2014, but not as a Bitcoin mining company. They started actually in the energy business, helping people achieve energy independence for their homes and businesses. So that's where they started out, in that sector, in the energy sector. Fast forward 6 years, we see that they began applying expertise to develop sustainable infrastructure for Bitcoin. So they became more invested into Bitcoin in 2020, and they scrapped their clean energy business, and now they are fully a Bitcoin mining business. Okay, and we look at some of the November updates. This is unaudited, but this is what they put out. So in November, they mined 535 Bitcoin, which was the most that they ever mined. We're going to actually take a closer look at that. Calendar year to date, Bitcoin mine has been 4,157. The total BTC holdings as of November 30th are 281. So you see that they're selling their Bitcoin. They use that to fund their operations and to grow their business. The total BTC converted for operations and growth in November were 544. So you see that they actually had to convert more Bitcoin in November than they mined. They currently deployed fleet of about 55,000 Bitcoin miners with a hash rate of 5.5 exahash as of November, which is up 8% from October 2022. Okay, so I do want to just transition here for a brief bit with the presentation that they outlined here. So as we see here with the Bitcoin mine and hash rate growth, we see they're about the 5.5 exahash now in November, but we see before in October 2021 that steady growth that they've been having. In June 2022 this year, we do see a key indicator where month over month they mine more Bitcoin each month. So they went from 339 to 384 to 395 to 448 to 532, and their latest and greatest of 535 Bitcoin mined in the month of November. So that is interesting to see their hash rate and the Bitcoin mine increasing over time. These are just some of the key indicators, showing the growth over a year. So we see their revenue went from 49 million to 131 million. The Bitcoin mine jumped from 892 in 2021 to 3,750 so far in this year. We see that they doubled the amount of facilities they own and operate from 2 to 4. Machines operated 4x. They had 10,000 fiscal year 2021, and now they have 42,000 plus in fiscal year 2022. We see that that had a direct impact on the hash rate. That also 4x from 1 exahash in 2021 to 4.16 exahash in 2022. And in turn, their megawatts also increased from 33 megawatts in 2021 to 140 megawatts in 2022. This is just taking a look at, those 4 locations. So they're in College Park, Norcross, Washington, Sandersville. They also have co-locations where they have hosted miners. So this is just an interesting showing how they grow. I just want to make note of this at the bottom here to project it end of calendar year of next year. So they expect a year from now to essentially 4x their growth. They essentially believe that in the year they're going to go from 42,000 operational miners to about 160,000, which is huge. They think they're going to also grow their exahash by 4x from 4.16 that we know this right now to 16 exahash by the end of the year. And correspondingly, they also hope to grow their megawatts operational from 140 to about 510 by the end of 2023. Okay, so now we're going to take a look at their September 30th balance sheet of this year, just taking a look at the differences of snapshots from a year ago. So as we see this year, their total current assets are at 50 million, with 20 million of that being cash on hand and about 11 million being Bitcoin. So, they do have some assets, they do have some cash on hand. As we see conversely, with the current liabilities, they have 34 million in current liabilities, with 24 million of that being for accounts payable and accrued liabilities. So I actually took a look into this because I wanted to see what was this all about. And it led me to this article here. CleanSpark finalizes a $35 million in financing from Trinity Capital. So this was directly to fund some of their Bitcoin miners. They used this financing to do so. This was non-dilutive financing, so this didn't impact the stock price. They didn't get shares in exchange to dilute us investors. But this was, what I found to be this huge $24 million accounts payable here that accounted for the bulk of this 34 million in current liabilities. As we look at it though, this is healthy. This is above a 1-to-1. Obviously, I would like to see it a little bit better than this, 2-to-1 and 3-to-1 to show more health. But, this is how, the look of a healthy company. And as you look at the total liabilities, they have 48 million in total liabilities. Their current assets are enough to eclipse that. So I do like to see that, they have more in total current assets than they do in total liabilities as a whole. Okay, and to wrap this video up, I do want to mention something that the CEO, he was in an article in Fortune, and he did have a little excerpt in that article. So this is entitled in Fortune: Bitcoin miners took on billions in debt to pump their stock, leading to a crypto catastrophe. So this was published on December 9th, and just a summary: not every Bitcoin miner has what it takes to survive the bear market like CleanSpark. I want to stop real quick right there, and that's what we're looking into. We want to look into all these Bitcoin miners to see which ones have what it takes to make it through this bear market, to make it to the next Bitcoin halving, and potentially have their profits explode. But to continue on, according to this Fortune article, CleanSpark CEO Zach Bradford keeps receiving calls from other BTC mining bosses who are panicking. We're one of the few miners who acquired substantially discounted rigs this year, thanks in part to the company's low debt. I found this statement to be fascinating, that you have these other Bitcoin mining companies coming to the CEO of CleanSpark, Zach Bradford, panicking, not knowing what to do, seeing that their businesses are crumbling before their eyes with this mountain of debt that they have on their balance sheet. And CleanSpark is saying conversely, they have low debt on their balance sheet, and they actually bought their miners when, capitulation was starting to kick in. Bitcoin Bitcoin was down, and that's when they kicked in their high gear and started funding their operations in high gear, which was smart. They didn't want to do things when everyone was in elation, Bitcoin was at its all-time highs, and the miners, I want to focus on that, the miners themselves were very, very expensive at that time. We seen the miners gain more in price than Bitcoin did, and that in part was for these mining companies to line their pockets. But we seen that CleanSpark didn't fall for that. You know, they are savvy investors, they're savvy business people, and they decided to do things differently to acquire their miners when things were discounted. So I thought that was a, pretty neat and interesting thing. But what are your thoughts? Are you investing in CleanSpark? Have you taken a look at this company? Did you listen to the earnings call yesterday? I thought it was fascinating. It sounded very positive. The CEO is very positive on the company. I didn't hear a lot of negative things within the earnings call. But whatever your thoughts, leave them in the comments down below. Thank you guys for watching this video, and I'll catch you in the next one.